Congratulations on the recent acquisition of Johnny Rockets, one of our family favorites. We live in Manhattan in New York City. Always a great place to go. I saw and read that this was something you were eyeing for some time, for several years, in fact. What's been going on with the company with this acquisition? Why now?
Right. Hi, Nicole. Thanks for having me. Johnny Rockets is a great brand. We're delighted to have it be part of the FAT Brands family. We've been working on this acquisition for several years. They finally put it on the market officially in January and then took it off the market when the pandemic hit in March. And we kind of just stayed in touch and found a way to get it done here. It really fits well in our portfolio. We have Fat Burger, which is an urban brand, with a big presence in California. Elevation Burger on the East Coast, which is a healthy, organic, grass-fed beef brand. And Johnny Rockets is a theme brand, and it'll fit really well in the middle there. So when we talk to a landlord or a franchisee, we can say, what's the right brand to fit in your location or in the demographics of that spot. So we're very excited about it.
Yeah, and I can see why. It's interesting, and for those who don't know Johnny Rockets, I mean, you could describe it better than I can, but I can only tell you because I go there with it almost feels like a place that they should be serving you on roller skates. It has this old school feel, super friendly. I love when they do the ketchup with a smiley face for the kids. They have a lot of little things, but great burgers, great food. It's fantastic. Did the COVID-19 crisis basically make this happen? Because you said that you'd been working on this several years. They officially went up for sale in January. Did they give you a really good price? I mean, was there a sort of, I don't want to say desperation, and I know you're not even going to acknowledge that, but I know Johnny Rockets in my neighborhood had closed prior to COVID-19. So what happened? Why now?
Look, the deal is that this is just for sale. It was going to be for sale anyway. It's not a fire sale at any level. Definitely, it's a little banged up. Every restaurant brand is a little banged up right now because of the pandemic. You know that. It's not in the fine dining space. Thank goodness we're not in that space. I feel so sorry for those guys that are fine dining operators right now. So, this will come back. COVID-19 is a short-term crisis. This is a long-term purchase for us. We were able to work through it. It's something that they wanted to sell and be done with this year because they've owned it for 7 years, and it makes sense as private equity, to move on. And for us, it fits right in. We're going to fit it in our portfolio and sell it to our franchisee base, to new operators. So there's really nothing about the deal, purchase price or the timing other than, we really feel like we can see beyond COVID-19 and get there.
Sure. Yeah, I agree. I mean, I think everybody can see beyond COVID-19, I hope. A lot of the stock market, we're looking forward to 2021, getting a vaccine, getting markets reopen and economy reopen. I mean, the stock hit a new high on this news. It's since sold off some, but you've had a big move in the stock price. It's interesting because you said, I feel sorry for the fine dining. What do you think about what's going on in some of these cities? I mean, we talk about what's your inside track, what you're hearing about New York, for example, or anywhere else for that matter, and why are your places better off?
California still has dining rooms closed. I mean, it's very challenging for operators. But if you think about it, so for us, delivery to go business went in the burger side from like 35% of sales to 70% of sales with the pandemic. And now it's up in the 80s just because some dining rooms are open. So very resilient there. On the casual dining side, our Hurricane Grill and Wings chain and our Buffalo's Cafe chain up and down the East Coast, those are casual dining restaurants with full bars that serve food and dining rooms. And we were very lucky that all of those restaurants have outdoor porches or outdoor dining rooms, like with a fake beach and sand and border around it. So we were able to pivot there, and we saw delivery sales grow from 5 to 10% up to 35%. So when the dining rooms opened up again, now sales are over 100%. So we're really doing well in those brands. But the more fine dining guys, if they only have a dining room and they're limited to 25% or 50% capacity, I mean, you have to turn those dining rooms 2 times a night and be completely full to make money. You can't do it at 25%, do one turn.
I see. Yeah, you make a great point. So you had a lot of deliveries and a lot of outdoor space, and that's why you actually did well during the pandemic. That's pretty great, and obviously a slew of names under the umbrella. And the outdoor space with the beach, the fake beach, your dog and me, we like those kinds of things. That being said, when you spin it forward and you look at the restaurant industry, what's the plan for your company? Are you going to continue to make acquisitions? How are you going to grow the company?
Good question. So we grow about 10% a year organically. So we'll open somewhere between 30 and 40 new restaurants this year. We started the year with 360 something units. And so we're growing organically by having our franchisees build more stores. In our business, the franchisee is really our customer. It's not the person eating the hamburger. It's the franchisee who pays us every week his royalty payment. So we have to make sure that they make money, they stay in business. We've coached them throughout the pandemic on the PPP loans and other things to have safe, protective equipment for their employees and guests and spacing. So we're going to do that. We will continue to make acquisitions because the platform is made for that. It's made to have one back office, one accounting department, legal department, et cetera. And so we'll continue to buy brands.
Can you give me 10 seconds on the food shortages that we saw during the pandemic and any thoughts you might have on that? Because we're still sort of seeing a little bit of it, right? Pepperoni.
You're seeing a little bit of volatility. I think it's calmed down a lot. Remember, there was a pork shortage, a beef shortage, a chicken shortage. It just kind of went all over the place. Prices went up and down. I really don't think that it's going to survive. This volatility is going to survive much longer. I think things will calm down. Where you end up with crazy problems are when you close dining rooms, things like that, and restaurants have already ordered, or the supply houses like a Cisco or US Foods or Gordon Foods or PFG, any of those big supply houses, they've brought in thousands of pounds of beef or chicken or whatever, and then they can't sell it because the restaurants are closed. So that's where you see a lot of volatility. And then they don't know what to order, right? Because they don't know if they're going to be open again. So they're reluctant to step up and place a big order that they could be stuck with. And I think that will calm down as we get back to normal and get a vaccine out there, but it's certainly been a little bit of a pain.